Hi, this is the squasher of regulatory impositions, or the SRI for short. Not coincidentally, it's my arch nemesis, the IRS, spelled backwards. Today, I'm going to explain why, for you as a restaurant owner, qualifying for the employee retention tax credit is a piece of cake, as easy as pie. Okay, let's dig in. Okay, so I thought I'd take you to the official source, the IRS website that talks about the employee retention tax credit. To make it real for you, and two, to highlight a few key concepts here. So number one is that this is a refundable tax credit against certain payroll taxes up to 50% of the first 10,000 that you're paying to an employee, whether it's wages and certain health plan costs that are paid after March 12th of last year. Okay, and so IRS says very clearly this is against payroll taxes, so this is not against income taxes. So if you have losses, ensuring the loss, you don't pay income tax, no problem. This is against employment taxes, okay, payroll taxes. And so you can get immediate access to the credit, okay, by either offsetting the payroll taxes due, or if you have a lot more credit than employer payroll tax obligations, then you can get a refund, okay, of the credit. And this is saying that you use this form right here, the advance of employer credits due to COVID-19. That's what we would help you file in order to claim these credits. Okay, and so now let's talk about how you as a business owner, specifically a restaurant owner, would qualify, and why I'm calling it a piece of cake. Okay, and it's because of number one right here. Okay, so this says that employers have two ways to qualify. It's either number one or number two. So we're looking at just number one, which is the partial suspension of operations because of government orders limiting commerce. Okay, and so what I'm going to claim is that as long as you were not able to open 100% indoors for indoor dining, then all that time would be eligible, can be applied for the credit. Okay, so that's what I'm saying. So you're saying when, okay, that's your interpretation. So you're right. That is very dangerous to rely on a person's own interpretation. That's why we have to go to the IRS's FAQ section and see what what their guidance is and how they would typically interpret the rules. Okay, so that's exactly what we've done. We've poured through over 100 FAQs, and I'm going to take you there now to the specific one that talks about, for restaurants, why it's a slam dunk. Okay, in fact, I'm going to take you to, again, you can see that's still the IRS website. This is FAQ number 34. Okay, and that asks if a government order requires an employer to close its workplace for certain purposes, but the workplace may remain operational for limited purposes, is the employer considered to have a suspension of operations? So, yes, is the short answer. Okay, and so it gives example scenario right here. So for a restaurant business, let's say all of the on-site dining is closed. So indoor and outdoor dining systems are closed, okay, due to the government order. But you can still have carry out right here, drive through, and delivery. Okay, so in this example, obviously, it's considered to be partially shut down. Okay, so you would qualify for those periods. You would qualify. Example number two, same as example number one, but a couple months later, after under a subsequent governmental order, we can do sit down, outdoors only, but indoors is continuously closed. Okay, so this also very clearly says are considered to be partially suspended. Okay, so And then furthermore, it says in a further governmental order, now indoor dining is open, but in addition to sit down and carry out services, but the indoor dining must be at least 6 feet apart, right? So there are capacity restrictions. So same thing. It says here, operations continue to be considered as partially shut down. So basically, it's saying that as long as you're not 100% sit down open, then all the time that you've been paying wages to employees, there are restrictions that you got to have under 100 average less than 100 full-time on average employees during 2020. But I'm assuming that's the case if you're watching this video. So if that's the case, then all the wages that you've paid are subject to that. Of course, there are more caveats to this, but I'm just going to mention one, which is you cannot double dip with other benefits or forgivable or PPP forgivable loans or tax credits that you're claiming on a given wage on these wages. And so what that means is back when the original CARES Act came out in March, employers had to choose either do the PPP or the ERC right here. This is the Employee Retention Credit, but not both. Okay, but thanks to legislation that was passed in late 2020, employers are now eligible to retroactively go back and claim both. Granted, you're not double dipping with PPP or other family leave or hiring tax incentives. All right, so if you'd like to get a better idea of just how much in the way of tax credits your restaurant will be entitled to, go ahead and book a time using the button below to speak with me or one of my super friends. I look forward to joining forces with you to combat the IRS together.